Welcome, everyone. Thank you for joining the New York Department of Financial Services for this inaugural event for our DFS Exchange program. My name is Caitlin Asrow, and I am the Executive Deputy Superintendent of Research and Innovation. Our division is the central resource within DFS for forward-looking research, data-driven regulation, and agile policy development. As part of our mission to provide these things, Research and Innovation designed the DFS Exchange program. The goal of DFS Exchange is to increase the transparency and openness of DFS for innovators and financial services providers in New York State. Through engagement with market participants and key stakeholders, from advocates to academics and beyond, we hope to do our part to foster responsible financial innovation, spur competition, improve consumer access to services, and promote inclusion and equity across these services. Today, we will feature opening remarks by Adrian A. Harris, Superintendent of Financial Services for New York State. Following that, we will have two excellent panels that will touch on the themes that underpin DFS Exchange: the role of regulators in fostering innovation, and how we as regulators can create innovation within our walls. As attendees, your lines will remain muted throughout the event, but we encourage questions. Please use the Q&A function in WebEx that you will find in the lower portion of your screen. Our sessions will run through 1:30 p.m. Eastern Time today. Without further ado, it is my pleasure to share a message from Adrian A. Harris, Superintendent of Financial Services. Thank you.
Thank you for joining New York DFS at today's event, which marks the reinvigoration of our approach to innovation and stakeholder engagement. Since I joined DFS 9 months ago, I have made it the department's mission to build an equitable, transparent, and resilient financial system that benefits individuals and supports business. A key part of achieving this mission is to ensure we are driving economic growth in New York through responsible innovation. The financial services industry has undergone significant transformation over the past decade, driven by web and app-enabled financial tools and new applications of technology, from distributed ledger technology to artificial intelligence. Our two panels today will touch on some of these key trends and more. I firmly believe that rigorous and efficient regulation is not in tension with innovation, and furthermore, that what is good for consumers can also be good for business. It is the responsibility of DFS to be aware of and monitor key trends in order to maintain the safety and soundness of institutions and uphold strong consumer protections. We are tackling this through a number of innovation initiatives, one of which we are launching today: DFS Exchange. DFS Exchange is an opportunity for financial innovators and stakeholders engaged in consumer-facing, market-facing, or supervisory-related tools, technologies, research, or emerging trends to meet directly with us and share their work. The conversations we have through DFS Exchange are critical to ensuring we can adapt and evolve our supervision, consider updated or new policies, and contribute to a thriving financial services ecosystem in New York and around the world. Beyond the DFS Exchange program, a key part of fostering innovation in New York is being data-driven in our decision-making. We are in the midst of an internal transformation, increasing our own capacity to ingest and process data, changing how we architect solutions, and considering what systems we need in place into the future to better serve our stakeholders. Through ongoing engagement and our own commitment to internal innovation, we will cement New York's place as the financial and innovation capital of the world. Thank you.
A warm thank you to Superintendent Harris for those remarks and for your overall leadership. It is now my pleasure to serve as moderator for our first panel. As a reminder, please put any questions for our guests in the WebEx Q&A function. And as we bring everyone on stage, I will kind of give brief introductions. So I'm joined by Christopher Brummer, Professor and Faculty Director at the Institute for International Economic Law at Georgetown Law. I'm also joined by Jimmy Chen, Founder and CEO of Propel, Maria Gotch, President and CEO for the Partnership Fund for New York, and finally, Dr. Nicole Turner-Lee, Senior Fellow at the Center for Technology Innovation at the Brookings Institution. Welcome, everyone. It's great to see you.
It's great to be here.
Wonderful. Well, to kick us off, I wanted to leverage the fact that we have Chris on the panel and his depth in kind of regulatory knowledge, and given the fact that he's a professor, I'll lean on him for this. But as I kind of get ensconced in the state regulatory sphere, I really wanted to start talking about the role of states in innovation. There's been a number of narratives that I've come across in my career. One, that it's challenging for innovators to have state-by-state approaches to innovation and kind of to their products and services, but also the ability for states to move quickly and adapt to changing environments, such as regulating areas outside of the traditional perimeters. I personally found that the ability for states to look across services more holistically is helpful, and that we have a pretty close tie to the mandate to stimulate competition and business opportunity. But given all that, Chris, can you give us a brief overview of our regulatory system and what you see as the role for states in innovation?
Sure, and again, thank you, Caitlin, and thanks to Superintendent Harris for the invitation, especially with this particular panel. You know, I think states have a really interesting role to play in the conversation on innovation, and I think that when you look or you think about sort of the larger map of the regulatory perimeter that's established by our federal authorities here in Washington, D.C., where I live. You can think of like the SEC and the CFTC and the Fed, and there are certain very deep writs of authority that are granted to those regulators that run very deep, but they're not necessarily very broad, or at least not always very broad. And what you have with many state regulators, including DFS, is this ability to regulate and to oversee very different kinds of industries. And so you can kind of test different kinds of hypotheses and test how they would work in a way in which you can compare apples to apples instead of apples to oranges, because you have the same regulatory sort of source of oversight that's being exercised. And I think that's a really unique kind of comparative advantage, if one will, that the states and many of the state regulators have over the federal government. And, not to be too law professory, but states are actually intended to kind of have that role. I mean, this just the way the government is kind of set up is that there is supposed to be some experimentation done by the states. And I think that, the states and having different consumers, having different different kind of proximity, frankly, to both their own home industries and consumers, it's very useful. And again, having one regulator to be able to test and kick the tires on different kinds of products and hypotheses about how to exercise regulation and oversight in a way that enhances things like competition. I mean, their mandates are also broader, their writ of authority is broader. It really just makes them necessary and even indispensable to regulation. And financial technology is certainly not an exception to that important role.
Thank you. I've absolutely felt that, and I think it really highlights that dual banking system and why it was created. So now, I think I would love to turn to Dr. Lee to help also lay some groundwork, because while we have this broader mandate at the state level, the perimeter is still tough. Innovation is still pushing on that perimeter. So I would love to understand from your perspective, Dr. Lee, what innovations are you paying particular attention to, and how do those interact with our current regulatory system?
The host. Okay. Thank you very much for having me. Can you hear me? My computer went crazy for a minute there. So thank you, Caitlin, and thank you to the superintendent for having me. Listen, I think I want to echo what Chris said, that we're in this state of flux, right? We have to have these conversations. We have to determine what level of jurisdiction is most important when we start to intermix AI technologies with these really important use cases like financial services. In my work at Brookings at the Center for Technology Innovation, I'm particularly interested in the disproportionate impact of these types of technologies on underserved and marginalized communities. So when you start to add that with financial services, we probably have a pathway that we have to engage in better scrutiny. Let me tell you what I mean. Right now, we have populations that do not have the type of accrued wealth equity that they need to, equally participate in our financial ecosystems. And what the internet has done on the positive side is that it's engaged more people through these technologies like fintech, buy now, pay later services. In one respect, it's actually allowed more people to enter into the economic sphere in a way that they can consume. But it does not necessarily create wealth. And that's an issue that I think we have to continue to talk about with regulators, the extent to which these transactional technologies actually lend themselves to furthering disparate impact. And so my work, what we actually see is when technology knows a lot about you. They know the time that you actually apply for credit. They sometimes know your last name. And if it sounds like, Hernandez or File or Johnson or something like that, combined with Shakita and Juan, as LaTanya Sweeney says, it actually starts to steer higher interest credit card offerings or predatory loans. We know that technology is being used in a greater capacity to make determinations around loan eligibility, add on to credit scoring in ways that provide subjective criteria as to whether or not you're financially able. My point is, we have to continue to scrutinize these technologies. They may appear to be very, helpful and supportive. I remember a couple of years ago, there were a lot of tech companies that wanted to help people build their credit score. They basically were sort of promising them, take out these small loans and do X, Y, and Z, but there was still scrutiny if people missed payments. And so part of it is, how do we regulate the technology in these spaces where we're still espousing values of fairness, responsibility, and even better than that, the type of scrutiny that we give for external products when it comes to civil rights compliance. How are we actually doing that in terms of regulating financial products and services? And the last thing I would say, just sort of go with Chris says, like, who's responsible? How are we actually engaging these products in ways that we build wealth equity? And we're not necessarily furthering these transactional activities that in and of itself may be a one-off, but will not result in someone purchasing a home or having the credit history to purchase a car or even be prepared for educational pursuits. That to me is this funny line, Caitlin, between innovation, where we actually have already gone as a society because the train has left the station, and how we balance some of these public interest concerns to make sure that we're not necessarily leaving people behind, but we're equitably plugging them in this new ecosystem.
Yeah, absolutely. I think something that I find really interesting, especially now that I'm in this kind of state landscape with a broader remit, is, are we technology regulators or are we financial regulators? And as we move into this era, we have to be a blend of both potentially, because as Nicole, you said, technology knows a lot about us, and that's fundamental. So keeping on this theme of kind of regulation to start, and then I do want to shift to kind of the technology itself and innovation for consumers. I want to turn to Jimmy. Given your experience as a founder, how have you interacted with the state system or with various regulators and their jurisdiction? And how do you think about kind of federal engagement versus state engagement?
Thank you, Caitlin. So great to be here today. So I run Propel. We're a Brooklyn-based fintech that builds an app that helps people who receive a government benefit program like SNAP manage those benefits and improve their financial health. We really treat the fact that we help people manage SNAP benefits as more of an acquisition hook. It's the reason why people seek out our app in the first place. And the real value that we deliver, besides helping people manage their SNAP benefits, is helping people save money on things, find jobs, and get a checking account. So we operate essentially a consumer neobank that works through a sponsor bank. And so to answer your question directly, we have sort of two aspects of our business: the work we do with EBT, which largely rolls up to human services departments at the state level, and the work that we do in digital banking, which is through our sponsor bank. And so with EBT, we interact with state agencies directly. In New York, it's the OTDA. And since we don't make money from states, we're focused there on building mutually beneficial relationships where we can help states to maximize the value of the programs that they have and the distribution of benefit programs. When something rolls out, when there's a change to programs like SNAP, and there's a need to reach low-income Americans, we serve more than 5 million families across the country each month, and so we can be a free distribution channel for those programs to reach consumers. On the banking side, we're regulated through our sponsor bank, and a lot of our work and compliance and responsibilities come through a close partnership with the sponsor bank. The question of, for me as an innovator, someone who's sort of built this company from scratch, I think the biggest piece of advice that I'd give anyone else starting a venture in this domain is don't pretend you're building in a vacuum. Right? If you are building something that's going to touch people's wallets in really significant ways, you've got to understand and plan ahead of time of exactly what it is you're getting yourself into. It doesn't mean that you need to spend a decade doing research and writing a business plan, but it also means you can't just move fast and break things when it comes to people's money. And the question of state versus federal, I think for us largely depends on the services we intend to offer. Right? So at Propel, we don't lend, we don't have an insurance product, and we are not a chartered financial institutions. So these specific regulatory burdens for us are quite specific to the work that we do when it comes to the EBT work or the digital banking work.
Thanks. I think that also it highlights, selfishly the goals of the exchange program and really kind of having innovators come to us and talk about those various kind of avenues and services that they are looking to provide and how that fits into the regulatory system, I think. Turning finally to Maria, how do you think about, given your role in New York City and New York State, how do you think of the role of DFS in stimulating innovation while also maintaining this safe and stable marketplace and protecting consumers?
So I think what's very interesting about what you all are doing with this panel and some of your new initiatives is embracing the fact and acknowledging that innovation is important. And you're starting that it's not while there are tensions, that it's not a dichotomy. You don't either have to be about innovation or about regulation, but that you can try to pull them together. Now, granted, you're gonna have to work your way through certain things, but I think the acknowledgement that innovation can be a force for increasing competitiveness, which usually ends up in a better place for consumers. It can be a place for products that bring new goods and services to consumers through the competition. It can be a way for the ease of use for consumers to improve and increase. It can be a way to solve and bring, as Jimmy and his company are doing, bringing new products that are sorely needed to the market. The trick is in the balance and understanding, where you should push and where you shouldn't push, and acknowledging, I think, to the industry that while you are about innovation, at the end of the day, your job actually is not to be about innovation, it's to be about the safety and soundness of the financial system. And so I think there's a messaging component to it, which you all are doing, I think, very well. And I think the superintendent laid it out very nicely in her remarks, what the dual focus is. And then some of the things that you're doing around acknowledging that you need to be accessible. There's a need for, if you think about it from an entrepreneur's perspective, what do they want? They want clarity and they want speed, right? So they're sort of working at a different timeline than a traditional financial services firm. They have fewer resources. And so clarity, so it's very clear what the rules are, and speed so that they can, because they're burning cash, many of them, particularly at the early stages, so they can get about their business of, okay, fine, you don't like that, okay, we'll change it and we'll go off and do this. So I think the acknowledgement of the pace at which innovation typically happens is different than what's happening with a traditional services firm, which has got a little bit more of a, that there's a cycle for evaluation. They have a big staff of people that can respond to things. So I think it's in that the balance is in the acknowledgement that innovators operate differently than large financial services firm, and making some sort of accommodations or acknowledgments that if you're going to have that be a part of the financial services system, which you have embraced, to be mindful of those things.
Yeah, I think we're definitely committed to, and something I've been particularly focused on since I started is really efficiency and getting that kind of speed up in our processing without sacrificing any of the kind of intensity and rigor.
And clarity.
Yeah,
I mean, many entrepreneurs like just what are the rules? Tell me what the rules are, right? And then I can go and tell me the rules quickly, and then then I can go.
Yeah, absolutely. And I think we'll get to this, I think, in the panel as well. You know, we're working ourselves on figuring out where some of the rules aren't bright line yet because innovation is changing and pushing us. And so, again, I think that's where that openness is key here, where people can come to us and talk about when our rules might not be clear for a specific innovation. Just one final piece for you, Maria, just because we get this feedback a lot, is that kind of in the mix of states, New York is known for being particularly rigorous, which I think we hold as a source of pride if we can get our efficiency there. But I don't know if you have any thoughts on kind of what that rigor means for bringing business to New York.
I mean, I think honestly it cuts both ways, right? So there is I guess I would say on the one side that if you as an earlier stage company take the time to work through and become compliant in New York State, it is a ticket that you can then take to most of the other states, because I think there's an acknowledgement that if you've made it through New York and you've got sort of that imprimatur or sort of acknowledgement that you're working in a compliant manner for New York, then you should be able to meet the rest of the states. On the flip side, if it's in a gray area, and the regs, particularly, I think, in the digital currency space, where the evolution of that is so fast, there's so many things that are happening, particularly outside of the United States, that there's a balance there about signaling that you're open to learning about things, so that the innovators don't think, oh, it's not worth my time, because the time that it's going to take them to get back to me or to understand, I can have a whole product developed and launched if I'm working out of the Cayman Islands. So I think it is, I would say on balance, it's a good thing, because you can then, if you're thinking about scaling, you can then take it, I think, more quickly to the rest of the country. But I think at those very early stages, I don't know that that's quite fully been figured out, is how do you do that really kind of skunk work, almost innovation within New York State. And I know we've talked about, is there a way to create kind of a test bed or very tight parameters in which to test things? That I think if that can be figured out, that would help balance that bit about, well, it's not, I need to get it done quickly. I don't really think I'm going to be regulated. I'll do it somewhere else. Issue that certainly exists, particularly in certain of the subsectors of innovation.
Thanks. So now I want to turn to this kind of this intersection, which we see as harmonious, but is challenging to navigate between tech, consumer well-being, and safety and soundness. So I think a question that I've wrestled with throughout my career, I'd like to pose to Nicole first, and that is, how do we as regulators know what is truly positive for consumers? And what should we be doing to try to answer that question?
Yeah, I mean, I want to sort of start the answer to this, Caitlin, by sort of responding to Maria, which is, I do think that we have to allow the ideation process to happen. But part of the problem that we also have with sort of giving more free rein to small technology providers versus incumbent providers, they both sort of fall in the same area, which is the lack of inclusivity of representative developers who actually understand the lived experiences of populations, that I care about and many of you care about. So I want to put that out there, because I think that goes back to this public interest question. How do we know when we're breaking stuff and fixing it later, right? As my colleague said, or how do we know that we're actually driving the public interest and not putting additional products out there that are predatory, particularly in this space? And I think it is a challenge for regulators to understand that. But I also think in my research that regulators have to interrogate the pre-process, the life cycle of the process, and the outputs or engagements that are happening as a result of the process. And let me tell you what that means. When you look around and you see a company that doesn't have a lot of representative diversity and you are a federal official or a state official or a municipal leader, you should question, particularly when you are contextualizing models that are going to go into communities that have been typically and historically underserved. We already know that in AI that, there's a tendency to sort of understand the deficit model experiences of certain populations. And people like Angel Rich, who actually is one of the founders of Credit Rich, has done a really great job in her application of building financial literacy and wealth by bringing people into the development process. She's an African-American woman, but there are other people who do that quite well. They think about who's not at the table, who should we be talking to before we actually make people an attribute of our work versus a producer of our work. That's one thing. So I think regulators need to ask those questions, particularly since we always land up at the same space, that something happened that now we have to address, as regulators do very well, harm. I think the other thing to think about too, when you're also thinking about the public interest, you got to ask people. I just finished up an article where it really talks about the fact that we don't have feedback loops. People are actually passively engaged in the algorithmic economy in financial services. We don't know if our neighbor is seeing buy now, pay later. We don't know if our interest rate is different than other folks, because what has happened is technology and innovation has allowed the internet to become a feeding ground of a lot of variables that now factor into the eligibility and determinations for credit and housing and pre-screening. And so I think it's really important for us to ask consumers as regulators, how is this working for you? Are there any types of concerns? Disclose that this is actually an algorithm that's making the decision. This is not, I have a lot of people I talk to in my work as a sociologist who are like, oh yeah, I took my credit karma score down to go buy a car. And they were like, no, come back. This is not gonna work. Your official score says X. It's not necessarily saying that the credit scoring system is fair. Don't get me wrong. But we don't disclose to people that we have this new economy that makes subjective decisions based on inferential data about us, because it knows so much about us. It knows our race without us even telling them, our gender, our type of computer. My colleague Aaron Klein at Brookings says it could tell you if you're creditworthy if you use a Mac over a PC. All of that is factoring into this new economy. And I think Caitlin goes back to this difficulty of protecting the consumer interests in this, but without asking people, we will not know. And then I would just say another thing that I've been pushing as a policymaker with like Chris in Washington, what's the appeal process? How do people get to go to companies and sort of suggest some type of appeal, not necessarily for enforcement, but to appeal to some of the design concerns, appeal to some of the decision concerns. We have not yet broke the ice there in a significant way where there's any type of legal precedent, but we do have some type of precedence on the internet. When we don't like our hotel, our airline, our doctor, we're able to tell somebody. We have some recourse. We might get some points back. We might get a certificate. We don't get nothing when actually an algorithm forecloses on our opportunity to get credit. And so I think that there has to be, for regulators, some conversation with innovators, of course, to figure out what is the best guardrail to ensure that we're doing no more harm because of the way that the technology is actually combining with these really important contexts.
Yeah, it helps me also kind of think about when I talk to earlier stage startups and kind of founders, and some people ask me, well, why are we talking to them so early on? But I think us being part of that development process along the way helps us see, I think what you so rightly pointed out, what is the building process? Who is involved? How are they making decisions? And I think then we see the product a little bit more holistically as regulators.
So Caitlin, if I can just make a point
please.
on that. I don't think in the history of time, an early stage entrepreneur has come and said, oh, I'm going to go be regulated. So I think your outreach to them, I think is really important. And you're making yourselves available and say, yeah, we are here. We're not here to we understand you're not going to be regulated, but we want to hear what you're doing. So you can give that kind of guidance. I think is really important.
Yeah, and I hope innovators know as well, they're contributing to the larger process. It's helping us understand them, but it's also helping us as a regulator understand the entire landscape and get comfortable with that process of building that we see in innovation. So speaking of building, Jimmy, you've built a very impactful fintech as you kind of described. The same question for you. How did you create something so positive for consumers, and any advice for regulators kind of to orient around what good looks like in fintech?
I'd start with the concept of good in fintech. I think the reality, as you all know, is that most products are not purely good or bad. That depending on the use case, depending on the consumers, depending on the data, there are different types of outcomes, and I think it's rarely as easy as a binary, choice of is this a good product or bad product. So I think that's where the outcome data comes in. That's where the challenges and regulation come in, is really discerning where the line ought to be and telling based on something that's quantitative, what sort of a product ought to be categorized as. I think in addition to that, though, the thing that I would encourage, and this really harkens back to Nicole's point, that it is really difficult to understand products without understanding the context in which they are used. And so there's a great exercise that I know Caitlin was previously involved in at the Financial Health Network called FinX, where sort of they set up a thing that was kind of like a scavenger hunt for financial services, focused on helping people understand what it's like to use a prepaid card and cash a check and take out a payday loan and pawn an item, and just realizing sort of the realities on the ground of what people's experiences are using those products. And I think part of the thing that I think anyone will learn by doing an experience like that is that products are not purely good or bad. Like, yes, there's a fee on this card. Yes, the money might take a while to arrive. There may be an interest rate, all those things, but it's in the context of, well, do I need to pay this bill tomorrow? How do I think about the options that I have? To your question about how I sort of built Propel as something that's intended to be positive for consumers, I really think Nicole nailed it, that it's about starting from the populations that have experienced a challenge and giving them as many tools as possible to create the solution to that problem. So I personally grew up in a loving but low-income household that was food insecure, and so after getting into tech, saw an opportunity to build something for my community, and to think about the experiences that I'd had and the privileges that I'd had, and find ways to build software that makes a difference. There's an organization called Blue Ridge Labs. It's part of the Robin Hood Foundation. I went through their fellowship program back in 2014, which is how I started my company. They've operated many years of that fellowship since, and the fellowship is really focused on this idea of how do we build in conjunction with the community by giving the community the opportunity, the resources, the tools to be able to build, in our case, software that solves the problems that they understand best. And that while it doesn't obviate the need for regulators and consumer protection, I do think there's some degree of consumer protection that's embedded in just the diversity of who gets to work on the problems. That when problems arise from the communities that deeply understand them, that it is a more likely positive outcome for that community.
Thanks. So I'm going to keep playing hot potato with this question and pass it to Chris next, but really focusing on the hard problem that Jimmy laid out, right? That when we think about innovation, there's good and bad outcomes. And we have this mix, but as regulators, we are trained, and it's our role to focus on the bad outcomes and prevent the bad outcomes versus stimulating the positive options. So Chris, what is the right approach? How do we focus on both?
It's interesting. I was just last week testifying on Congress on some very similar sort of issues in digital currency markets. And one of the things that I have increasingly come to appreciate, and it really does reflect, Caitlin, some of your initial comments, is I think that regulators have to be builders too, right? That the question of sort of engaging innovation isn't just a question of engaging innovation on the innovators end, but the regulators are going to have to innovate themselves. And I want to touch on just one or two topics sort of to build in that direction. But I was struck by Nicole's comment of regulators should ask certain kinds of questions, depending on, particularly when you get to the AI kind of question, like what are the inputs going into your model? Like what kinds of assumptions are there behind your model, right? And to ask, well, are you getting a very sort of diverse array of inputs just to make sure that your tool operates properly, right? Well, you won't necessarily have people asking those questions if you have a homogeneous regulator either, right? And so, this question of making sure whether or not, you have the proper inputs to think about, different religious, racial, geographic groups means that you kind of have to have lots of different people with lots of different experiences just to be able to ask the questions that go into constructing the appropriate tool. And I'm also struck, just by the contextual issue that Jimmy brought up, right? And it's something that I've heard before from community banks of all things, right? Where the community banks, the minority depository institutions, rural banks have said, when when I have some kind of not enforcement, but compliance person from either the state or federal government come by to look at my bank and all, they've never really dealt with the people I have to deal with, right? That they don't understand my community at all, and so their very concept of risk is one that kind of reflects certain, may be appropriate for certain kinds of models, but they may inadvertently be introducing new forms of risk precisely because they don't understand the way in which economic relationships may necessarily evolve in my community. And this is just to sort of highlight the fact that there's a lot to be done, sure, on both ends, frankly, and the regulators have to be able to ask those questions. They have to understand that they should be asking those kinds of questions, just like on the industry end. If you really want to build a smarter, better tool, you want to make sure that you kick the tires on those tools, and that involves not only just creating great algorithms and but making sure that the assumptions upon which your models are built are actually correct and are actually going to lead to positive outcomes. I do think, and then finally, because it is this question around gray areas and when is it better to go, or to engage or to start up in a more, let's call it, regulatorily intensive environment versus somewhere else. I mean, that's such a good question, and it's a hard question. I do think that engagement by the regulator has to be, early on. It's useful for the regulator to think about what engagement actually means, right? I think it's important to listen. Absolutely. And, I always, people say, well, what kind of attitude should regulators have? I said, well, they should have, open minds and open eyes, right? I don't think that you should come with a closed mind to things, but you should keep your eyes open, and to lean in, where you can. But, that engagement has to be a good faith engagement. And ideally, it has to be one that's not going to be, it has to, ideally, it's going to be on the merits. And I mention that because giving clarity is kind of important to early stage companies, especially if you're burning your capital. And then if some kind of new rule comes up later because of whatever pressure from somewhere else, now you have a bunch of sunk costs, right? And I think that engagement question doesn't mean doing whatever industry says, but it does mean at some point in time leaning in to provide at least some kind of on-ramp or bridge to keep your jurisdiction competitive, and also to ultimately get to good outcomes, right? And it's a balancing act. I was just this morning I was talking about how horrible that we all have to be nuanced every day, because every day you're kind of pendling back and forth between the idea, not to be too philosophical, but the ideals of the Enlightenment and the reality of modernity, right? And there's this kind of pendling back and forth. How do you regulate? How do you innovate? How do you create? And how do you build good technologies that still aspire to the best of our values? And that requires some nimbleness, not just on the innovator side, but I do think it requires it on the regulator side. And there has to be, and I'm delighted to see that in the great state of New York, some kind of acknowledgement that that's a hard thing to do, and that you have to do that, just like asking certain kinds of questions, as Nicole has mentioned. There are certain kinds of things you have to do with intentionality, whether or not it be clarity, whether or not about sort of the supervision part, whether it be about building up the opportunities for the consumers, and then creating the on-ramps for the innovators like Jimmy, who are out to change the world.
Yeah, I think that the highlight of us needing to be builders too is essential, and I think something we'll definitely talk about as well in the next panel. But something, Chris, that just a follow-up question for you that I think we talked about in other contexts as well is, how do I create incentives for staff, and how do regulators create incentives for staff to live in that nuance, to live in that philosophical, tough nuance and make judgment calls and enable judgment calls when it's really easy to say no, when there's risks to saying yes.
I think it's useful to just be sort of clear, particularly, again, I live in Washington, D.C., so, sometimes I feel like part armchair psychologist for both industry and regulators when they call me up, to talk about their issues. And I think people should be clear that right now the incentive structure for your staff is to say no because there's no upside to saying yes. If you say yes and something goes wrong, you get blamed for it. And if you say yes and nothing goes wrong and you have a fabulous outcome, you never get credit for it, right? And so, the incentive is always just to say no or to delay. And, without strong leadership from the top, it's very hard to break down that kind of really cultural atrophy. And it makes your institution very poorly designed to adapt to the future. And I think that I do have some kind of I have over the years, too many years, I've actually thought about a couple of things that agencies could do. I think it's important to empower the staff. I think it's far too often that we hear stories of even when people talk about workers' rights, staff aren't always being treated the best way, and how can you make sure that those staffers are able to engage with industry and to attend conferences, whether or not at Georgetown or whether or not with industry, just to know what's going on, to communicate their views in a way that won't necessarily be taken as law, but to be given and to provide some sense as to the possible direction of the regulatory curve, to ask certain kinds of questions very blatantly and above board, and to ask, so, how is that technology going to help, your local community there? And just be able to ask it, and to feel free to do that while also asking and saying, hey, that's pretty neat. That's kind of neat that you're coming up with this outcome. I think that there are ways that agencies themselves are going to have to kind of do a gut check and to ask, if we really want to keep on top of where innovation is heading, we're going, even though we are in the New Deal administrative state, how do we create tools that make us more adaptable, that give us the ability to learn, and that also decentralize a little bit of our operations in ways that help to onboard people? Because a lot of times, even those administrative burdens tend to impact the most those people who have the least amount of capital, and those businesses with the least amount of capital tend to be smaller, tend to be, where there are minority entrepreneurs, tend to be that's where they're usually going to be located. And, they're just, again, I think that there's a range of things that the administrative agency should do, but there should be an acknowledgement and an understanding that is a problem. Particularly, again, in a world where you have fast-moving problems, fast evolving problems, where you really want to make sure that your staff has the expertise and feels empowered to engage.
I'm going to take away from that, amongst many other things, your service as the armchair therapist to the innovation community writ large. So Maria, I just wanted to see if you had anything to add, in particular with kind of your instrumental role in launching the Fintech Innovation Lab here in New York City. How do you think about consumer well-being and fintech and kind of fostering that for the state?
So when we set up the Fintech Innovation Lab coming out of the financial crisis, we really did it as an economic development activity to try to make sure that New York City got its fair share of fintechs. We were the capital financial services, but at the time, a lot of the kind of innovation fintech was happening on the West Coast and in Boston. And so New York has obviously done a great job over the last 12 years in building up the tech side of fintech, if you will. And we started actually engaging with regulators about 5 or 6 years ago. And so we have as sort of execs in residence 2 former regulators who actually meet with the companies. So they're former regulators. So Chris, to your point, this is a chance to have a dialogue in a low stakes way, but with somebody who actually knows what's going on or understands the landscape, to give them guidance about their products, things they should be aware of. And then they are a kind of on some level, a backdoor conduit to the current set of regulators. And we always bring the class to Washington, which we did about 2 weeks ago, to meet actually face to face with regulators. And those dialogues have been really interesting because it is, in a low stakes way, a chance for regulators to ask questions, to raise issues, but in a we're having a conversation as opposed to I'm taking a regulatory look at your product. So more, I think, of that, and we've continued to do that. And sometimes the companies are a little bit of like, wait, why do we need to go to DC? Like, we're not regulated. But always afterwards, they come to us and they say, oh, that was really interesting and helpful, because the companies in our program are selling into the financial services organizations. They're not direct to consumer. And so, I would say the companies that come through our program are one step away from direct to consumer, because they're all developing products that would be delivered through a major financial institution. So there is a level of having to pass a large bank's regulatory scrutiny. They're not delivering things out directly to the consumer in person. And so I think that there's a little bit of a check on some of the direct to consumer issues that have been raised on the panel about, just putting things out there and using all the data to make decisions that may not be in the benefit of the consumer. So they are kind of relying on sort of the existing regulatory regimes in order to get to sort of flow back, if you will, into the fintech's product.
Thank you. This brings me to a topic that we've kind of talked about in a few different aspects today already. But when we think about the traditional financial system, I just want to touch on kind of equity, inclusion, and racial justice, because the traditional system has troubles as well with regard to these things and others. And so, we talked about, diversity within regulators and the importance of diversity in teams that build products. And, I think a lot about data and kind of taking in data and outcomes, but, data at an aggregate level can be quite misleading. So just curious, maybe starting with Chris again, we have consumer protection laws and those cover, again, our traditional financial system. Some of them seek equity and provision of services and access, but do those laws need to evolve to address kind of the reality that we all know we're in, and how does kind of fintech interact with that as well?
Well, yeah, that's a nice hard question. And I think I'll definitely my instinct is to say, so what do you think? Unfortunately, I don't have 122-year-olds looking at me, but so I think you would have to say the following. My sense is that both in the agencies and in the laws, one of the biggest questions or one of the biggest challenges, particularly because you have fintech services often, providing solutions that optimally are going to open the credit box. I'm on the board of Fannie Mae, and we Fannie Mae had introduced a new kind of credit solution that's based off of rental scores as opposed to just rental history and the history of rental payments, as opposed to just have you paid a mortgage, trying to break the chicken and the egg kind of problem when it comes to the credit box. Like ideally you have solutions that are going to open up the credit box, but precisely because many of them are serving historically underserved communities, you have the risk that if they go poorly, if they go wrong, different kinds of solutions can have a disparately negative impact on those communities, right? So you have this kind of weird tension. I do think that when you look at at consumer protection laws, as well as the agencies, I tend to be struck by the absence of an emphasis on financial inclusion itself, right? So one of the things that you had mentioned earlier on is that the way in which you orient your modern or today's agency is that it's only on not just risk, but a certain kind of risk, right? And by doing that, it kind of funnels the attention of the regulatory agency in a way, whether or not you're thinking about you know, disclosure rules under the 33 Act for the securities law purposes, all the way to you know, more your consumer protection laws with CFTC. There's not very much of an emphasis on financial inclusion, either from a kind of, let's say, supervisory standpoint that Nicole is kind of stressing, to the opportunity sort of emphasis or point that by definition Jimmy is opening up. You just don't have that, right? And I believe that that is a huge problem in terms of how you think about the regulatory sort of system. That's just not anywhere at all, right? You know, and you know, you can get to maybe things that are designed to prevent bad things from happening. So ECOA, for example, but you're not necessarily. None of these laws are geared towards building stuff, right? Which is when you're dealing with builders, it's useful to have that kind of mindset. And when you as an agency are facing all these challenges that you've never seen before and you're going to have to build, that would be very instrumental and helpful as well. So, I mean, that's from my standpoint, you know, if I was going to say what's the critical or the, you know, a huge missing piece regulatorily or legally, it's the absence of that honed in focus. I mean, maybe honestly, maybe the Community Reinvestment Act is the closest thing to it, right? You know, and that's only dealing with, I mean, that changes from time to time. Still doesn't deal with the OCC itself, and there are certain kinds of limitations. But like that's really the closest you're going to get in any of the regulatory agencies. So I'll just stop because that was a hard question.
Yeah. Well, I'll give everybody else a chance to answer the hard question as well. Nicole, do you have any view on kind of the role of financial regulators and regulation in this issue?
Yeah, you know, like Chris said, this is a hard question, but I'll take a stab at it, like just focusing on, you know, I think a couple of things. You know, first and foremost, I think regulators do play a role. I love what Chris talks about in terms of regulators themselves having some diversity of interest in this as well, some skin in the game, essentially, to know that the innovation can be managed in a way that it can have, you know, a positive output or at least a lesson learned of things that we don't want to do. But I wrote down when you were speaking, I think regulators should also be thinking about a couple of things, Caitlin. One is process, right? So one of the things that the EEOC, for example, has done when it comes to the use of AI is that it's come up with guidance principles. So they've just put out guidance in the use of emerging technologies when it comes to hiring, guidance in the use of AI, for example, when it comes to people with disabilities. Having regulators sort of have their foot in first, where maybe it's not a rule, but it's more of guidance or best practice, I think is a really interesting and smart way to approach this. It almost goes to, and I'll put my policy hat on, what the White House has tried to do with the Bill of Rights, where they're trying to say, we want to give people a Bill of Rights, but we can't go state by state, New York, California, and say what that looks like. Perhaps there's this federal CFPB regulation, you know, guidance, but maybe places like New York can actually start to think about that. The other thing that I would also think is important in terms of process and then data. We didn't talk a lot about it here, but I do think that is very significant. What we actually have oftentimes when it comes to data uses is we're actually using what Dr. Renee Cummings at UVA calls traumatized data. So it's data that's not necessarily pure in its form. It comes with a lot of historical imprints. It has a lot of skewed metrics, as Chris said. It depends on the sample size of the people that we're looking at. At the end of the day, we should be scrutinizing as regulators what data we're relying upon. And if possible, engage in partnerships with colleges and universities, with the National Science Foundation and other entities to build better data sets. I think that's really important because right now we have that type of scrubbing when it comes to like NIST, the National Institute of Standards, but we don't have that when it comes to real subjects and the extent to which we're having differential treatment or disparate impact. And then I would say the last thing, kind of going to Chris's area of being innovators themselves, I actually love the use of sandboxes and other types of tools that regulators can sort of put out into the public, you know, domain and say, hey, we actually want to use this tool, and we do want to collect a little demographic data because we want to make sure we're not further biasing people. We want people to actually understand that process. Now, it comes with some concerns. You got to make sure there's some fair and reasonable indemnification. You know what I'm talking about, Chris? I mean, there are a lot of subjects that give
I've written on this. I've written on Sandbox. I'm like it's remarkable. I don't even understand. This is where I'm like in DC. I just don't get it. Right? I when I'll say this and it's like, oh, you're talking about Sandbox. I'm like, so the rest of the world is doing this, and we can't think of something that reflects the best of American values to like gather data, gather information, enable people to start to build things that they're interested in, and make sure you get the good outcome. I personally, I just don't get it. I mean, I wish I did.
But the thing is, and we have a model. It's called a clinical trial. We do it all day long. That's exactly what a clinical trial is. We're using a real drug in real people, tracking real results. Yeah. There are parameters. You get approval from the regulators. You take your data to the regulators. The regulator has the ability to look at the data. And if there are problems with the data, they send it back if they don't like it. And so you cannot start the trial until they sign off. They sign off on parameters. And then they have the ability to shut you down if things go bad. But there's an assumption and there's an acceptance on both sides. Sometimes things go wrong, right? But it's in a limited way with controls.
Yes.
And it's how you bring innovation into an area, which particularly in the case of introducing a drug to a human can be, things can go wrong. But if you didn't have that, we'd be taking Mrs. Blah's pink pills, right? That's where we'd be. So I completely agree. This idea of, and I know for some reason the word sandbox makes people nervous. Call it a test bed.
It gets me so nervous. I'm like, I don't get it.
Call it a test bed. Call it something. But I think a structure like that, and I think, and you could even put parameters around it. You could say we want to do one around financial inclusion, right? So we want everybody to come to the table with ideas that are around financial inclusion. And we're going to let you test it, right? And we're going to sort of we're going to follow it. We're going to monitor it. But this is a priority for us, and I think it allows you then that kind of a structure to make sure that you're bringing in entrepreneurs that represent the diversity of the people that you want to serve. If they're not the entrepreneurs, you can bring focus groups that represent those people. I think this could be a really interesting structure, and it sounds like we should all work on that.
People have tried to politicize it. I mean, because even within the financial regulatory agencies, don't get me wrong, like there are ways in which no action letters, you do still certain kinds of, the tools exist within the regulatory agencies, right? And this is why I said, good faith efforts, right? It's about good faith efforts, and not everybody, and I'm not just talking about industry, not everybody, is going to have financial inclusion as their priority, okay? And I, whether or not they're, sitting as regulators or whether or not they're on the industry side of things. And often, I was struck once. I was over in a sort of CDFI talk over at Treasury or something, and somebody, the head of a CDFI said, when I hear sort of extremists talking or trying to debate consumer protection and innovation, he goes, the guy says, usually it's somehow I always figure that like people of color are the ones who end up suffering the most from it, right? Because people are kind of talking to their book, right, to make a point as opposed to making policy. Mm-hmm. And the product of that conflict is one where you don't end up, sometimes you miss out on very low-hanging fruit opportunities, and I think that's that's really a problem, because there are a lot of really good ideas out there, and we're not always able to leverage them.
Right. And Caitlin, I'll just add in, look, we just sort of took over for a minute on that sandbox piece. That was like a trigger. Listen, I'm a big fan of sandboxes too, but I would actually put it out there, at least with regulators. Listen, part of the reason why people keep pushing sandboxes is because we keep pushing regulators on the output side, the outcome side, like was mentioned. So regulators then have to go in and figure out what happened with the model. And we have these like esoteric terms. Can you explain it? Can you give us your code? Can you tell us, and most regulators don't have that background. And so there's this conversation that needs to happen, which is we want to create the best financial inclusion product. So what do we need to do to make that right? And as Maria said, what are the limited consequence? We call that in social sciences, how are we handling human subjects in a way that we can actually garner good information, shut it down early if it doesn't work, and let consumers know who are participating in the study that we're handling their data with human care. That's one side of it. But the other side of it is when the product is out, how are people getting the right civil rights recourse to go back? And that's where like the CRA, the Fair Lending Act, how are we actually matching those settled acts, those settled regimes with technology? And that's where the challenge is, Maria, to tell you the truth. We haven't applied not one of those types of guardrails outside of what you're doing in your work and trying to teach a better crowd of people in this space, but those often don't get applied. I think it was mentioned earlier because the tech space is sort of exempt. It's break it now, fix it later, plow through, apologize, and regulators are dealing with yesterday's problems as a result of that, and that's why they're always a little bit behind.
I just
I
want
just
to
feel
do
sorry for Jimmy.
a little plug.
We should let Jimmy talk because, like, Jimmy is like, hey, I'm the only guy who actually built stuff around here.
All right. Well, I'm going to set up Jimmy because I think I'm going to do a little plug for New York. I think that move fast and break things is a really West Coast thing. I think in New York, there's a little bit more because people have come out of financial services. There's a little bit more acknowledgement of like, oh yeah, there are regulators. Anyway, and Jimmy's, I think, a good example. So over to you, Jimmy.
I appreciate that, Maria. And I there are lots of experts on this call on a lot of these topics, and so I'm very eager to step back and let you all drive the conversation on sandboxes and others. I just want to add like one maybe counterbalancing point here on the subjects I think are very fair as we think about the different ways that financial services and fintechs can cause harm. That it like adding a bunch of different checks, whether they're regulatory checks or different criteria that a new venture has to meet in order to even get off the ground, can make it really, really hard and really, really expensive to start a new venture. And I think we have to balance that with the fact that, especially if we're talking about underrepresented communities given the chance to start ventures that solve their own problems, we've got to figure out a regulatory regime and a set of, a way to become compliant that acknowledges the fact that, we want to make this accessible for people. We don't need you to have a PhD or be a professor in this domain in order to start a venture. It shouldn't have to take you 5 years and $20 million to be able to get through all the different checks in order to get something live to real consumers. And so I think the point about clinical trials is an interesting one. And I think that to me, the corollary to that is that the amount of rigor in how we think about what can get into the clinical trial needs to be consistent with sort of the potential for harm to the consumer. Right? If we're talking about looking at some read-only data that obviously we don't want to be lost or stolen and used the wrong way, the harm there is limited in a way that like taking a drug that might kill you is probably not, right? And so just to sort of be consistent and to be thoughtful about the magnitude of potential harms in order to build an inclusive system, I think it's something that we have to consider.
Can I jump into that just real quickly as a policymaker? I love what Jimmy is saying, but I want to push back just a little bit on this, right? Because, clearly we don't want to be like the EU or other places that we're all familiar with, where there's highly prescriptive rules and guardrails around what you can and cannot do. It's had some short and long-term effects on innovation, and pretty much their regulatory authorities are pretty clear, and it's had stacked regulatory authorities. Places like the EU, there are multiple agencies and the bandwidth to actually do that type of discernment. But I want to put this out there, though, because in the conversation that I have with a lot of people, I do agree with you that we can't sacrifice innovation. By the way, Maria, I was born and raised in New York, Queens born, lived in New York, so I completely agree with you right on that. But I kind of keep pushing people, particularly we started talking about financial inclusion. The greatest asset that most low-income people have, most people of color have, is their Social Security number. That's the greatest asset. They don't have a house. They don't have assets in terms of a 401k. They're not often holding a savings account. When we see people in gentrified neighborhoods lose their home, they lose their home, they lose their life, they lose their health insurance, they lose their jobs. Sometimes they lose their kids. What I'm trying to say with that, what the pandemic showed us, that those that are most vulnerable were the most vulnerable health-wise, but also economic-wise. Why that's important? I'd rather you take time when it comes to the care and handling of financial inclusion. And I do agree with you, and I've said to people, we need to start post-it noting this. There's green light if we know that the kind of reparable harm is not going to be irreparable for people. We can fix it, right? There's other forms of harm that sometimes we don't realize that actually puts people back in ways that they cannot recover. And so in my work in particular as a sociologist, I'm not a technologist, but I listen to a lot of people around this stuff. We sometimes think that the trade-offs are worth it, but the trade-offs in a system that is already unfair just make it worse for the people that are marginalized. And so that's why we have to have more diversity. We have to have more conversations, interrogation, and process. We have to have better data. We also have this ability to audit and sometimes just say no when we know that it needs more time or more regulatory guidance. I think when I listen to civil society groups, they're willing to do that. And sometimes technologists, I'm writing this article where I tell people at the end of the day, and I love the way Chris said it, it's about risk, but it's also about reputation. And that is much of a reputational risk is as economically harmful to companies and developers as the risk that we're actually putting on people themselves. So just wanted to put that out there. I'm sorry I'm sounding like a Black preacher because I am, but I get concerned about that because I'm like, if we go wrong with these models, we go very wrong, and people suffer without even having the ability. They're like a tree falling in the forest and you don't know because they were already fractured by the financial system that we have.
Oh, Nicole, I very much appreciate that. I think all of you have given us the playbook, right? The playbook that we need to take on as regulators and to think about. So we could obviously continue to talk about this for a long time, and I know we will in this group and moving forward. So, I think this really underpins the goal of DFS Exchange, which is to have open, honest, nuanced conversations, as hard as they are, with innovators and with all of you moving forward. So such a huge thank you to Chris, Jimmy, Maria, and Nicole. We will see you again. And with that, I think we'll move to our next panel for the day. Thank you. Have a good one.
Hi, everyone. Thank you all so much for joining us for our second and hopefully equally insightful discussion today. And thank you to our panelists, our very lively and engaged panelists from our first conversation. So my name is Seema Shah, and I serve as an Assistant Deputy Superintendent of Innovation here at DFS. And I'll be moderating our second discussion today called Trends in Supervisory Technologies and Approaches. The goal of this panel will be to underscore some of the themes mentioned during this earlier panel by talking a bit more in depth about how regulators can transform themselves to better oversee technology and innovation, and what industry can do to more effectively participate in that transformation as well. So as per the first panel, for this panel, if time permits, we will try to take a few audience questions from the Q&A function in WebEx. So I invite everyone to use that feature and drop in questions at any time. I'd like to start by briefly introducing our panelists, but you can read more about their illustrious bios on the DFS Exchange website. Today, we have Francesca Hopwood-Rode, who serves as the head of the Bank of International Settlements Innovation Hub Center in London. Welcome, Francesca. Next, we have Kevin O'Connor, who is the Chief of the Virtual Assets and Emerging Technology section in the Enforcement and Compliance Division at FinCEN, or the Financial Crimes Enforcement Network. Welcome, Kevin. Next, we have Melissa Natrum, who's a partner at the advisory and advocacy firm FS Vector, and formerly of the CFTC, where she served as the Commission's first Chief Innovation Officer and Director of Lab CFTC. And finally, our very own Caitlin Asro, who is the Executive Deputy Superintendent of the Research and Innovation Division here at DFS, and who expertly led our first panel. So thank you all for joining us for our second discussion. Thank you specifically to our panelists. To kick things off and to really pick up on the thread that was really highlighted and underscored a number of times in the first panel, today we're here to discuss both strategic and tactical ways that regulators can work to keep pace with innovation in the marketplace. I know that all of us have an articulated interest in being more transparent and innovation friendly. So for our audience, I'll pose this question to all of our panelists. What are your top strategies to achieve this goal in being more transparent and innovation friendly? Anyone can kick us off, or maybe, I'll start with Francesca, if that's okay.
Thank you, Seema. And can I just say, I've spent the last hour, as I'm sure I know our audience has, listening to that incredible discussion by that panel. I was completely entranced and felt totally privileged to be able to listen to such a vibrant, thought-provoking, just astute conversation. So it is really my privilege to join this panel today, and thank you very much for the invitation. One of the things that really struck me, there were a couple of themes from the last panel that I think, really tie through to what we're going to be talking about now. And that's kind of what's the burning platform for why regulators need to be in this space. And I think, we hear all the time, don't we, about the pace of change in technology and innovation. We've heard so astutely from the previous panel about the impact that has, for good and for ill, on consumers. The need for us to have the right skills and talent to be able to interrogate what we are seeing, and the right tools to help us interrogate what we are seeing, to learn about the opportunities, but also crucially the risks. And I think, whether that's about helping us to see what's going on at the perimeter, to understand what might need to come in, to help us, interrogate, explore in collaboration, which is a theme very close to the hearts of us at the BIS Innovation Hub, collaboration with a broad constituents of partners, whether that's the private sector, whether that's, our fellow regulators and central bankers. What I've heard today is, just the value of hearing other people's experiences, understanding what works, what doesn't work, where are the spaces and opportunities, learning from experiences like sandboxes, which from my previous experience at the UK's Financial Conduct Authority is something obviously we know very, very well indeed. So I think kind of, to your question, kind of what are the drivers? It's about the tools, the techniques, whether it's tactical or strategic, to help us as a regulatory community engage with, understand, interrogate through our people, through our capabilities, this hugely exciting field around tech and innovation that is increasingly coming together. And I think we see that in the proliferations of terms: fintech, regtech, subtech. I heard, what was the term I heard the other day? Resolution tech, res tech. There's a proliferation, but I think that speaks to it's a small, maybe sort of more light-hearted illustration, but I think it does speak to, in a very serious way, actually how much change is being driven across our portfolios and across the breadth of our remits, and our ability to understand and keep pace with that is absolutely key.
Kevin, I'd love to bring you into this conversation as well, as it relates to what regulators can do.
Yeah, and I think Francesca hit a really good points there. And of course, thank you for having me today. It's really an honor to be here, especially after the great discussion that Francesca highlighted in the last panel. I think it actually sets up this point very, very well. From a regulator's perspective, I think, we've hit on a lot of the points about, being inquisitive, opening lines of communications. I really think it can be very simple in just listening and having the opportunity to listen and engage with people when they have new ideas and having channels for them to go through. I think, we've done a very good job at FinCEN at engaging when we have certain problem sets to go out and talk to the industry and share information. I just think that there's such a key, there's so much that can be gained from that. Just giving industry the opportunity to come in through our Innovation Hours program and present new ideas and ideas that they have that could revolutionize how we're doing how we're performing our functions, how we're looking at what our regulations have. Francesca again said it very well. We need to look at how technology is being used and how it will be used, and how that fits in the existing regulatory perimeter, but also what that regulatory perimeter should look like in the future. And if we don't have that kind of engagement, you don't make good regulations, and you don't supervise appropriately if you're shooting in the dark and can't engage with people on that. I just think having those formal channels and informal channels where you're able to listen to people and build on experience is so critical to understanding the universe that's out there. I can pass to Caitlin on that too. I know, as a regulator, you probably have, similar insights in your experience at NYDFS.
Yeah, absolutely. I think the tactic that we're clearly taking and that, fully agree on with Francesca and Kevin is this engagement. And I think when I say engagement, it's engagement externally, which, is the goal of the exchange program, but internally as well, and really breaking down those silos internally. And I think there was a comment as well from an audience member just talking about how the siloing happens in banks and financial institutions as well, where an innovation team might not necessarily be tied in with the risk and compliance team. And I think a lot about, not just engagement for engagement's sake, but intentional engagement. You can bring a lot of people to the table, but and that can be effective. It's not death by committee if you really have a goal and you have someone kind of driving the conversation and leading the charge there, but bringing all the voices to the table and allowing space for those voices as well. And then, not kind of producing work in the vacuum of your particular division.
So Melissa, let me bring you into the conversation here, maybe putting on some of your kind of advisory hat and expertise. So, we talked about what regulators can do to be kind of position themselves as more innovation friendly, but from your perspective, what more should be done? What are the obstacles? What are the either, Caitlin just mentioned, internal potentially cultural obstacles or others, that you think regulators should be orienting towards or thinking about?
Yeah, thank you. And thanks again for having me. But just want to echo what everybody else said. That was a fabulous first panel. And I kept thinking like, wow, we can really build on that on this panel, because there's a lot that I think we can pick up off of in terms of the discussion. I think, a lot of it has been said already, either on the first panel or what Francesca or Kevin or Caitlin have already said, which is, one of the challenges, I think, is that the government regulators don't have the innovation mindset that innovators have, right? The whole, let me just fail and pick up the pieces and figure that out. Government regulators can't do that, right? Because you just can't. You're entrusted with the American consumers, American public's money, or in Francesca's case, yeah, the UK money, right? But either way, right? You're entrusted with your citizens' money and to do what's right on behalf of the public. And so they don't have that mindset. So helping them to understand the mindset of, let me just launch it and let me test it. I'm a big believer of sandboxes. I know there was some discussion on the last panel. I like the idea of sandboxes. I think people are concerned about that term and what should it do. Somebody once said to me, think about it like a bunch of kids in a sandbox playing well together. You don't necessarily just stand back and let them throw sand at each other. You have the teachers around the side making sure everybody's playing nice and doing what they need to be doing. And I think we have to think about it in that way. Another thing I think that is a challenge I think that regulators have is when it comes to timing, right? Like, government doesn't move fast, right? But innovation and tech does, right? So think about like application process, right? And a process to get licensing. I'll just give my experience at the CFTC. We had some requirements of like 180 days. It was written in statute, right? 180 days to review an application for them to become registered. Well, 180 days, that's 6 months. That's a long time for a tech company to wait. And thinking about that from a mindset of an innovator or a tech company, that what are they supposed to do? Just kind of see what, just wait till they get word back from the regulator. And I think that's a challenge that many innovators and tech companies continue to face, right? When they go for the licensing, when they try to do things the right way, when they notify regulators of certain changes and they just, they're sitting and waiting until they can get a response. And I think regulators, and I could say this now that I'm out, right? I think regulators, we just need to be faster, right? And figure out a way to get that response or get some type of response back to them so they know that they're thinking through that. I'd be remiss if I didn't mention the Alliance of Innovative Regulation, AIR, put out a paper in 2020 that I didn't contribute to, but my predecessor did, about the challenges of innovation offices to do a lot. It was called Regulators' Dilemma. And it focused on here in the US, how there were a number of outdated laws that have nothing to do with innovation, but that are out there and as a result limit what regulators can do. And this was stuff I faced at CFTC all the time, the ability to do some type of sandbox or tech sprint or whatnot. And you keep, hitting up against those outdated laws that were there for a reason in the 1920s and 1930s, but almost 100 years later, it doesn't make sense, and we got to figure something out. And so I think if you just kind of look at all of that, that's a big piece of some of the challenges regulators have.
Seema, can I just come in on and build out on Melissa's point around failure, because I think it is such an important one. It's something I have been contemplating a lot recently. But I think what's really, I think for me there are two elements to it. I think there is how innovation teams within regulators can be that sort of point of friendly agitation, that sort of grit in the oyster, if you like, but actually thinking about how how that can be a really positive force for good, how you can think about kind of ideation, thinking about working within your organization to surface pain points, how you can bring an innovative mindset to that. But there are also the kind of challenges that come with that as well. Often innovation teams are, quite rightly, I think, small, they're lean, how do they affect change in often quite large and sometimes kind of quite siloed organizations. And then there's the outward facing piece about what they are building and how they engage with the kind of the wider innovation community, the wider fintech community, for example. And I think that's from holding the space for that as regulators and as leaders within innovation within a regulatory context, I think is something that is really important to contemplate. How do you hold that intention, that sort of space intention, which is about playing into and affecting change? Caitlin, you talked about it, kind of that mindset within an organization to hold that kind of, regulators are about managing risk. Innovation is not necessarily a comfortable bedfellow in that space, but the space for innovation to affect change in cultures and behaviors. And then the kind of the outward facing, managing kind of the innovation into a wider community with a different risk appetite and with a maybe fail fast and break things mentality. And I think that's a really interesting tension, which I think can maybe be a barrier to regulators sort of stepping into the innovation space.
Yeah, and just building on top of that, Francesca, it's really interesting. Everybody sort of picked up, and I think the last panel did this great point, talking about exactly what you're talking about in sandboxes, where it's move fast and break stuff. I'm a regulator that's responsible for the anti-money laundering, counter-terrorist finance regime of the United States. Like when you break stuff in your FinCEN, like that, bad things happen. So I think, there's a different level of engagements and different kinds of concerns that need to be considered when you're bringing into that system. And there, when you're talking about, what should be permitted and what's not permitted, there is this idea that, you're not necessarily going to get a blank check where it's just do all of these things. And, there still are going to be kinds of controls that need to be in place. If you're moving fast and breaking stuff, and that stuff is facilitating like the North Korean nuclear program, I mean, there are pros and cons of what's happening. And that's not to say we can't promote innovation, we can't move forward and allow for opportunities to grow and listen for that. I think there are opportunities there. It's really that's why we need to, you know, go back to my first point of listening to what's out there, understanding that, and moving in a deliberate way. To Melissa's point, it tends to be more bureaucratic. There are challenges that we face, but that's not always going to be a bad thing if we ultimately get to a better point that has the appropriate safeguards in place and can allow innovation to move forward in a more responsible way. Yes, I'm the conservative regulator on that point, but understand where I'm coming from and what the mission of my agency is, and you can probably at least better understand where that perspective is coming.
But I think that thing about guardrails is absolutely critical, right? And it, you know, how you kind of work out the space to play, which is appetite for your agency and for the challenges in the space that you are operating in, is absolutely critical, because that kind of those thresholds within and across agencies is going to be different. And I think that's a really important piece. It's not one size fits all. It's a really important kind of not so subtle piece that sits across.
So let me go ahead, Caitlin. Sorry.
No, I was just going to say, you know, I think this further, you know, to bring back what we talked about as well in the last panel, you know, nuance. Like, it's a really hard job that we have in innovation offices to say we're going to find those guardrails. We're going to still push the envelope where we can. We need to get everyone comfortable with failure where we can fail, but like find those places where we can be comfortable failing, and where we absolutely need guardrails. So I think, you know, it's one of the things with regard to kind of, you know, being transparent is that to put it out there that we're trying to navigate those waters, and we're trying to provide an opportunity for ourselves to failing in the right ways, failing in the important ways, while keeping those essential guardrails, those essential kind of safety and soundness consumer protection structures there that we know, the market and consumers depend on us for. So that's not to say to toot our own horn too much, but, you know, we're trying, and it's a hard job, but that's why, you know, I think we all get a lot of satisfaction out of what we do.
And I wanted to pick up on that. Oh, sorry, was that you, Melissa? Go ahead.
Yeah, no, sorry. I was just going to add, like, I think those guardrails are critical, right? When the regulation takes time or changes take time, right? As you're moving towards those, having guardrails or guidance or something to give to innovators in tech, because Kevin, just as you said, right, valid point, right? Them failing fast when it comes to sanctions or something that you want to be doing with like North Korea or Russia, right? It's critical. You can't do that. That being said, until like an agency puts something out, innovators are going to continue to innovate, right? And no ill will, no, like, all in good faith, but it's still going to happen, right? And with the lack of guidance is what's concerning, right? Because you just have to wait until regulators can comment.
And I think I want to pick up on this theme. So we talked about, Caitlin, in your first panel, you know, the importance of early engagement with the regulatory community and how valuable that could be for an emerging company or even an idea in the financial services space. But I'm curious what advice you have to innovators, specifically early stage innovators who don't have the resources to bring on outside counsel, to bring on a lobbyist, to potentially bring on all of these support infrastructures. What advice do you have to them to enable them to do their homework, to prepare for a good conversation, whether it's through the DFS Exchange platform, whether it's through the Innovation Hub, whether it's coming directly to FinCEN? What advice do you have for innovators to help them best prepare for these types of conversations?
I'll start, and then, you know, my other panelists, I'm sure, will have lots to add here. You know, I think one of the things, and we touched on this earlier, is, you know, I hope they don't need to prepare that much. Part of it is, again, bringing us along in the process. You know, we're creating these channels by which we can be transparent and open. You can come and meet with us and start talking to us about these things. And so, you know, I think to be inclusive and kind of equitable and be kind of open to people who've come from different backgrounds in their building of these technologies and of these services. Really just say, like, let's start the conversation. I don't think they need anything. And then, that's a two-way exchange of learning. And then as they evolve and kind of go on in their building process, I assume they'll, get more comfortable with the legal structures, with the regulatory expectations, with risk and compliance. Now, obviously, again, going to Kevin's point, where they're focused, what the risks are that they're touching, they might need to be, more engaged sooner. But, I hope at the base level, when there's just an idea, they can really come to us with that with not much else.
So let's move on. We talked about this innovation mindset being kind of a core underpinning, but let's move on to the technical infrastructure, which enables innovation as well. So how do you think layered legacy systems, or in general, kind of the slow adoption of technology, impacts regulatory effectiveness? And I'll start with you, Kevin, on this one. And then, what do you think are some of the challenges introducing a new system as well?
Yeah, that is always something that's really that you really do have to take into consideration is, government isn't always going to be, this sort of relates to what we were talking about before. Excuse me, government's not always going to be in the best position to move as quickly, to modernize and get everything and adopt the latest products and things like that. I think there are substantial challenges that can exist around that. Sorry, hold on one.
We can, someone else could hop in case Kevin's fixing his audio, it looks like.
Yeah, speaking of technology.
I can hop in if Kevin is working through things. So, I mean, this is an issue very dear to my heart. And I would probably make kind of 4 points. So thinking about kind of building within a regulator. You talked about, Seema, you talked about legacy systems, and I think sort of breaking that out and sort of saying, what do we mean by that? I think that it's things about, it's not just your systems and your, do you have the right technology stack to help you to ideate, to help you to build proof of concepts, to help you to test and experiment and explore with, within those guardrails that we talked about. I think it's also data, access to data and the right data. So, most regulators will, I'm sure, say the quantity of data is not the problem that they have. It's the quality of that data. It's the timeliness of that data that enables, the talent that you bring in, your data engineers, your data scientists, your production, your engineering teams to then do something with that data to help you build your supervisory technology tools, for example. And that, these are not insignificant challenges as well. I think what it can be very helpful is also kind of contemplating, back to Kevin's point a little bit, do you want to be in the buy versus build space? Do you want to kind of start to experiment and build your own capability that is clearly bespoke to the challenge, the needs that you have, versus kind of maybe an off-the-shelf solution, which might not actually do the thing that you need to do, and there's quite a lot of iteration that's required. And then, of course, there is the kind of whole path to production and how you scale those tools for wider consumption across your agency, and how they engage with those tools to help them, utilize tech and innovation in the delivery and the execution of their supervisory authorizations, enforcement activity. And I think there's a whole plethora of issues that sit underneath those things, and it speaks to skills, it speaks to talent, it speaks to your tech stack, it speaks to actually what kind of internal sandbox environments do you want to create to help experimentation and development, etc. But those would be a couple of the observations that I provide, and maybe Kevin's back in the room.
Yeah, I actually think I just got it. Speaking of tech challenges, but no, really, Francesca, you said it really great. I mean, I don't have much to add on top of that, but I do apologize for my technical difficulties and the disruptions that it causes there. But I think I'm back now. Thank you.
And Melissa, let me bring you into the conversation here. What do you think are some of the regulatory kind of technical blind spots maybe in your former role at the CFTC, but, what do you think are some of the regulatory handicaps? And then how do you, recommend potentially addressing or solving some of those challenges?
Yeah, I mean, I think my fellow panelists here have highlighted a number of them, but one point I would just call out is resources, not only like financial, but people, right? Having that are up to date on the latest technology, as well as the money that you need to invest in that new technology. I do think one of the issues often is you have an old clunky system on the back end, and you, instead of just, pushing it to the side and starting anew, I think it's building on that old clunky system, and I hate to, for lack of a better term, making it even clunkier. And a lot of that is just simply because the limitations that agencies have, right, when it comes to resources and things like that. And again, no fault of their own. It's just that is what it is, right? So what can innovators do to help with that, right? I think like it's been said now, that there's so much data that's out there. Can we figure out a way to get the data to regulators in a clear, readable format, right? And that's easy for them to understand. It's not just looking at at the CFTC, right? We were looking at the market, right? But not just looking at the market and the volatility of the market, but also looking at other things that are coming down the road, or making it clear that this is a growing problem or a growing industry or whatnot. Right now, a lot of folks, push more data into regulators based on the format that's required of them, and that's completely understandable. But I think that being able to talk to regulators about, hey, we've seen that maybe this may help you, or that may help you, or I know a number like FinCEN and FDIC were doing a tech sprint on a number of things, right? And participating in those types of forums so that the regulators can use the tools that they learn from those tech sprints, right, to start engaging in it on their own. I think that's just as valid as just standing back and saying, oh, well, these regulators are using these clunky systems.
Just one thing to add on to what Melissa was saying too, just remember that when you're talking about an institution, particularly from a federal government perspective, you have a lot of stakeholders that have different technical capacities as well. So for example, when you're looking at the covered financial institutions from FinCEN, we're talking about, yes, the largest banks in the world, but we're also talking about mom and pop check cashers. We're talking about all different kinds of financial services. So when we're talking about moving innovation forward and making sure that we have a system that is modernized, we also need to take into consideration that we have a wide array of stakeholders that are impacted by that and have different technical capacities as well. So it's not just a question necessarily when you're looking at implementing some kind of technical modernization about how we're doing it as an agency, but how it's going to affect all of our stakeholders that are part of the financial system as well.
Yeah, that's a really good point. Caitlin, go ahead.
I'll just, building on this, I think one thing I wanted to highlight was, again, as I've evolved in this space, one thing at first I was kind of like, why are SupTech and innovation offices tied? What is the key here? Because we have kind of financial technology that we're looking at from a supervisory perspective, from a risk perspective, and then we have kind of this modernization, building our own technical systems internally, what you could think, okay, that's IT or that's kind of administrative systems that you're just building. But I think from my perspective, why I think innovation offices have been and will continue to be leaders in pushing for modernization is because we see the need, right? We see that fast moving market and we say, we need to be able to keep pace. We need to be able to monitor this in real time. We need to ingest data in new ways and really assess the risks in order to keep pace. And we're seeing all this technology in the market and we say, we want to play in that too. We want to use that too. So I think that is why these issues are so interconnected. And so as we're bringing innovation thinking in from a supervisory perspective, we're also going to use it too. And I hope we do. Obviously, as other panelists said, it's challenging to integrate that with the legacy systems that we have. But I think the same tools that we have of engagement, of bringing stakeholders to the table, of creating kind of consortiums and communities internally and externally are essential for kind of building tech, just like they are for understanding tech. And so I think that's what we've been focusing on here at DFS, is kind of bringing the people to the table and say, how do we transform our technical systems, just like how do we transform our cultural risk-taking appetite and our openness to innovation.
I think that's so important, thinking about, not just what you transmit out in terms of your engagement, your understanding, your surfacing insight, but also what you learn to apply for yourselves, and that kind of cross-fertilization. We heard it brought so beautifully to life in that last panel talking about clinical trials and sandboxes. How we as regulators open those channels for dialogue, for collaboration, to understand what is going on, not just what is being done, but how things are being done, what tools, what skill sets, what capabilities, what can we be inspired by within our sectors and others, to help us think about how we can do what we do more effectively and efficiently.
So we've kind of started with the innovation mindset, kind of transition to tools, systems, technologies. We touched a little bit about data, and I'm curious if you have, again, any advice for innovators as they're looking to navigate these complex kind of data regimes. So whether that means managing data from other public entities or public sources, even the data that they produce or analyze, and then they have to either upstream back to the regulator or to the industries that they serve. What advice do you have from like a data ethics perspective, a data management perspective, and specifically a data governance perspective? And if it's okay, I'll start with Melissa. Oh, go. Oh, Francesca.
No. Melissa, please be my guest.
Well, thanks. Yeah, I mean, the advice I'd give to innovators is the same, like we were saying, which is, the regulators want to know what's going on, and believe me, there are very smart people in regulatory agencies, and it's not like they don't know and aren't educated about a certain industry or the background or the technology, but they need to hear from you in terms of what you're seeing, right? So that maybe there's a blind spot that regulators don't have simply because they're getting the data the way that they're required to under their statute, right? And so if you're seeing something that's not normal, you should talk to them, right? And share that piece of it. And then the data governance piece is very important, right? And no matter whether you're a market regulator, consumer protection, or what, right? You're looking at it from a point of view. Well, what is this data valid? Is it legit? Where are you getting this from? How many people have looked at this data? Are you manipulating the markets, right? Is the market right? What's out there? And trying to build a trust with a regulator to share that this is a valid source that you should continue to look toward. I think that's just as important. We talk about data and we think about it from a point of view of the like numbers and reports and whatnot, but I think we have to think about it one more way, and I see data also as not, and we talked a little bit earlier about, and even the panel earlier talked about like the aspect of education, right? And I mentioned, right, very smart people in government, they get this industry, they've done their research, but those, I think it was Jimmy on the last panel talked about like the financial health networks program where they do like you just go out and you do scavenger hunt to learn what it's like to cash a cashier's check. And I've participated in this program, and it's amazing. And we used to have something at a tech company I worked at in the past where it was called Follow Me Homes, right? And so for regulators to get that data too, not just from the industry or the innovator that's trying to solve the problem, but from the people who are actually using those products, right? So they get to see firsthand like, listen, this innovator is really trying to solve this problem, and actually look at the end result, right? Here's, consumer X, right, who uses it and the effect it has on one's financial life.
I actually think there's a lot of innovation in that space in general, more than anything else, about how to manage data, how to ingest data in a meaningful way and discern, discrete points out of it. I think there's a lot of, that's a lot of what we're hearing about and what we're really interested in as regulators. I mean, if you look at the responsibilities of, FinCEN, again, speaking from an agency perspective, we're a financial intelligence unit. We collect reports from different financial institutions, and it's our responsibility to use that information in a meaningful way and leverage analytics to identify typologies that we can feed to law enforcement, or identify particular discrete illicit activity that we can refer to law enforcement or take a regulatory action on. Really, really important work. But we're always trying to find that better way of data management where we have the ability to look at either the same set of data in a new way, or to supplement that data with something meaningful that gives it new information and a new way to do our job. And I think there's a lot of really interesting advanced analytical ways of looking at data. I'm not going to use any of the buzzwords and say, machine learning, artificial intelligence, anything like that, because I think, sometimes people can be distracted by using those terms when they're using the terms almost for the sake of using the terms when you're looking at data. But I do think, we've tried to use we've tried to use this technology internally to better discern information from our suspicious activity reports. So if you look at, for example, a great example of this, in my opinion, is the ransomware report we put out last October on, what financial institutions we're seeing in the ransomware space, basically taking our data set and able to use, analytics to identify trends in ransomware filings that we could then put back out to financial institutions to enhance their reporting, fulfill that intelligence cycle of getting more reporting on ransomware, and, meet that agency objective. That's, a whole of U.S. government objective to safeguard the financial system. All of that really matters when we're talking about how we're going to ingest it and better ways that we can innovate in how we're looking at information. And I think there's a lot of really interesting stuff that's going out there in that space.
Can I sort of take a slightly different line on this, which is around kind of your people and the people you need to really do, you talked about the pyramid there of Seema, of data management, data governance. Kevin, you just talked about data analytics, advanced analytics techniques. I don't know if it's similar in the US, but certainly in the UK at the moment, there is a real fight for talent. And it's a very small pool of people who are available to kind of bring into your agencies to exactly do this kind of work. And it spans that spectrum, right? From your data governors, your data managers, your data architects, all the way through to your data scientists. And so there is a challenge there about kind of, for us, certainly in a UK context, kind of a fight for talent, and how do we start to think about growing our own, which I think is really, really important. But with that as well, it's going back to that pyramid. And I think if the challenge is, maybe I'm speaking to the regulators just who are in the audience at the moment. One of the things that I think is quite challenging is that there's a temptation to go, I'll just recruit loads of data scientists and I'll just point them at my data and it'll be awesome. And it is awesome. It is awesome. It does incredible things. But there's also a risk that, as I've said, regulators are not short of data, but have they got the kind of best quality data and the right data? As Melissa pointed out, it could be point in time, retrospective data. and on and on and on. We could talk about this all day, I'm sure. But what that means is that you need a really diverse skill set to be able to engage with the data that you are consuming as an agency, to be able to derive our insights, to enable you to be forward-looking. It is not just your data science population. You need people who understand the structure of that data, who understand what that data is telling them, to then be able to kind of work in multidisciplinary teams with your domain experts who sit across the organization to say, and this is what we need to do as a result. This is what it is telling us. And I think, that sort of that spectrum of skill sets that you need paired with the business acumen within your organizations at a time of intense competition for those skill sets, it's something that I think as agencies, everybody is wrestling with.
Yeah, Francesca, I'll build on that because I've been thinking a lot about building our kind of analytics capabilities, architecture capabilities here at DFS. And one thing I think about a lot is getting data scientists in, getting architecture in, but also translators. So I talk a lot about these key people that will talk to the data, but then also will talk to my policymakers and will talk to my examiners and be able to kind of translate the concepts and also push back and say, this can't tell us something, or this isn't fit for purpose, or this isn't really going to be used in the best way in this function. So definitely thinking about skills, not just in kind of silos, but that can provide these kind of APIs to talk to other team members about. And then I'll also just highlight, I've been, for those who know me, obsessed with kind of data governance and management within institutions, and I'm bringing that here and trying to think about, we have all these resources, but how do we really put a framework in place for what's fit for use? How do we bring kind of data together, have a golden source, think about whether we want it centralized or decentralized in our agency? And I think Dr. Turner-Lee said it best, right? We have traumatized data. Not only do we have point-in-time data, we have traumatized data when we're thinking about consumer information about individuals. And so how do we be respectful of that in our institution and have the right kind of policies and procedures in place to be able to use it effectively for oversight, for policymaking and decision-making, but do it in that holistic way?
Yeah, Francesca, I think you were the one that introduced the concept of it, like an internal sandbox or an internal learning ground. And I think data is like the prime example of like why we need to build that culture of internal learning and innovation internally as well, and failing with data internally as well, failing with analyzing it, not understanding if it's clean or not, figuring out ways to clean it, and thinking about that. So that just really resonated with me, your comment around that. So let me, I know we're heading towards the end of our session together. I just have two questions that I'd love to put forward to this brain trust. One is actually picking up on a theme that Dr. Nicole Turner-Lee had introduced around direct engagement and this transparency around engagement, either between the regulator and the public, or even innovators and the public, specifically innovators that are building tools for mass consumer adoption. So what strategies do you think should regulators or innovators use to engage with the public on new products, services, innovations that they're working on? We do town halls and things like that, but what do you think are the most impactful ways to baseline transparent engagement?
I can try to start for some of that. One of the things that I think, this is going to sound kind of dumb, but I think it's like, do not be afraid to talk to your regulators. I think there's a lot of opportunities for people to be engaged on a lot of different fronts. Whether for us, it's, largely through our innovation hours. But, we get a lot of queries about specifically about certain ideas that come forward, and we're happy to engage on those different ideas. What's more problematic is when something launches, right, and then we see something in motion and people come to us afterwards and try to ask for forgiveness rather than permission. And I think there's a lot of hesitancy to approach us. I'd also say while products are being developed, there are opportunities to engage with us when there are regulatory questions, or if there's something that you're not understanding. For FinCEN, we have a helpline that answers directly questions about the BSA, but we also have, an entire policy office that can give you a regulatory interpretation if you think you have a sort of business model that rubs up against or creates creative challenges against the regulations. And what I find frequently is that we're not engaged early enough in those processes to be able to have a meaningful impact in helping businesses, better understand what their obligations are from a U.S. anti-money laundering, counter-terrorist finance perspective.
So from a kind of Bank for International Settlements point of view, I mean, we don't have that kind of direct, our constituents is very different, in terms of the central banking community. But from an innovation hub perspective, collaboration, and I think I mentioned it right at the top of our panel, is a key kind of characteristic, a key motif of our work. And that's collaboration with the private sector, collaboration with, the central banking community, with academia, across the kind of 7 centres, the innovation centres that make up the innovation hub. And that is really critical because, for us, it's about saying these are the things that we're interested in. These are the 6 domains that we care about. These are the kind of problem spaces or opportunity spaces where we think we can uniquely kind of use our convening position, our global sort of collaboration position to add value. But we cannot deliver unilaterally. We need the partnerships. We need the, you use the word brain trust. We need that to kind of really help us to shape, refine, deliver the kind of prototyping, proof of concept activity that we are seeking to do. And so that kind of dialogue, that engagement, that showing the kind of spaces in which we are seeking to operate, I think, often from very, very early days, often, we don't know what success is going to look like. We know the outcome we might be driving for. We might know the hypothesis we're seeking to test, but then it's about having a conversation with people who have the skill sets, who have the insight to say, how do we refine this? How do we crisp this? So that and we then build it with a view to then seeking to achieve the outcomes that we're building for.
I would just, just to add on again to what others have said, right? Go through these innovation offices, use these tools that are there in terms of office hours or meetings and talking to regulators and seeing how it is, but also participate when it comes to things like, oh, there's a tech sprint going on, or, oh, they're asking request for information or request for comments or comments on a notice and proposed rulemaking, right? Regulators need that input from the industry, not just through those innovation office hours, right? They need it when policy is happening, and being able to participate in that, whether it be a tech sprint or comments or whatnot, is just as important.
Just to selfishly plug on top of that from FinCEN's perspective, because Melissa's absolutely correct. As we undergo our Anti-Money Laundering Act obligations to, sort of modernize the BSA, we've issued a lot of ANPRMs and NPRMs already, but we're probably going to be doing a lot more in that space as well. So there will be opportunities. And people should take advantage of that if they actually do have meaningful or substantive comments to impact what the future of regulations in our space looks like, at least from FinCEN.
Well, thank you so much to all the panelists for joining us. I really appreciated hearing your kind of tactical ways of, baselining responsible innovation for the regulatory community as well as for innovators. So thank you again. With that, I will turn it over to Caitlin to just share some brief closing remarks. Thank you.
Thank you so much to all of our panelists for their insights and sharing their experiences during this event. Thank you to all of our staff for their dedicated work and to all of you for attending. So this is first of many events and engagements DFS Exchange will be hosting on these topics. And in the future, you'll see us dig into many of the issues highlighted today in kind of more detail. And just to reiterate, DFS Exchange is our platform to engage with the industry and stakeholders at this intersection of innovation, safety and soundness, and consumer protection. So as part of DFS Exchange, we have a program to request direct meetings with our teams, and we'll continue to host events like this and to engage in market events more broadly. So hopefully these conversations spurred your own thinking, and we would appreciate continuing the dialogue with all of you. So please reach out to us through the program at innovation@dfs.ny.gov, and you can find our information on the DFS website as well. So thank you and have a wonderful rest of your day.